change so much shit on YouTube, bruh. Welcome, ladies and gentlemen, to the Terry Julian experience. So happy you can join me here this evening, folks. This is a live broadcast, so if you got some stocks you'd love to share with the people, please do not hesitate to join in by calling the call-in line listed at the bottom of the screen. Now, folks, I'm going to step away for a few moments and pay some bills. Don't hate me. Hate the game of capitalism. I got to do what I got to do. I'll be right back on the other side. Looking for a credit card that offers flexibility, security, and peace of mind? Look no further than Capital One. With flexible due dates, you choose when to make payments that work with your schedule. Automatic credit line reviews that help you to grow credit and unlock more benefits over time. And with $0 fraud liability, you can rest assured knowing we've got your back in the event of any fraudulent activity. And the best part, the pre-approval process lets you find out if you're eligible for any card without any impact on your credit score. You can apply with confidence knowing that you're already pre-approved. So why wait? Click the link in the description. Take control of your financial future and apply for a Capital One credit card today. Capital One, what's in your wallet? Attention shoppers, you've never seen anything like this before. An online mega store with all your favorite name brand items at rock bottom low prices. HP Silent Mice, $3. Lenovo Bluetooth wireless headphones, $6. 5 12 gigabyte M2 SSD drives, $15. DDR4 16 gigabyte RAM, $35. 4K high definition drones, $20. Video capture cards, $5. 256 gigabyte USB 3.0 flash drives, $25. 65 watt USB-C chargers, $20. Price is good until supplies last. All new customers get 30% off using the website Temu30.com. That's Temu30.com. 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 What's going on, ladies and gentlemen? It's your boy Sal in the building tonight. Running a little late, but I'm here. I don't know how many people are in here. I can't see shit right now. All I know is that I'm fucking live, okay? A lot of people didn't think I was ever go live again. But I'm in here, man. Shout out to everybody who's like watching me right now. I can't tell how many people are in here, but we got a couple people in here trickling in. And I'm here for an hour, so I gotta do what I gotta do to build up my channel back. And that's what I'll do. I'll sit right here. I don't care if there's one person in here. I'll do exactly what I need to do to make sure this channel's back on track. All right. So let's go ahead and start looking through the charts and keep it pushing. Let's go ahead and take off the music and let's see what the market has to say. What's going on, everybody? In your opinion, what's the way to expose synthetic shares? What I see what you want to say, Amun, but why would that matter? Like how would that see that really concerns traders who are very, very, very. I mean, that's a day trader question. I get what you're saying, man, because you don't want to be misled by price action. But at the end of the day, you see, that's something that really doesn't affect me because I'm so long duration. But I wouldn't know how to answer that question, my brother. He said, fix my mic. What's wrong with the mic? Is it too low, too high? What? I want the schedule to be Monday, Wednesday, Friday. Well, no, Monday, Wednesday. Friday gets me into trouble. When I get them Friday shows, it gets me into trouble. The white folks start reporting my shit. Hold on, somebody's calling me here, Fremont. Hello? Hey, what's up, man?
Glad you're back on the YouTube airwaves, sir.
Yeah, I'm happy to be back. Who's? Well, who am I calling? Like, who am I speaking with right now? The voice is so familiar, but I feel like I haven't heard this voice in a long time.
TC, I've chatted with you before, but just call me TC. All good.
I appreciate you for calling, my brother. Yeah, you live on the air right now, man. What you got to say, brother?
What's your opinion on natural gas, oil, BOI, IL, and Riot blockchain? I just wanted your thoughts on that. Riot and oil.
Riot and Boyle. All right, appreciate the call, brother. I'll go ahead and let you go. Appreciate
Thank
the
you.
call. He's saying Riot and Boil. Let me make sure that you saying that right. Boil, like boil water. God damn, these are beat up. God, Lord Jesus, that is a beat up stock, my brother. Um, Jesus. Man, I don't see any hope for this, man. I mean, this is really bad. Ultra natural gas, and I mean, even on the, and I hate going too so close like this to the price action, but I mean, you're not even above the 10 moving average on the hourly. This is really, I mean, this is really bad, man. This is a really bad stock. I wouldn't take a look at any stock that's below the 10 moving average, man. That that right there basically says you have no momentum. You know what I'm saying? You have no buyers. If you're not over the 10 moving average, that's really like over the last 10 days, nobody wants this stock. That's really the beginning of all movement. Aggressive movement is the 10 moving average. So if you're not even above that, that's not something you probably would want to be in. I mean, consistently, you got to go all the way back to December of 2022. To You can't even get a week above the 10 moving average. RSI is well below 50. I don't like Boyle at all, man. Riot blockchain. I love the idea of the Bitcoin exposure here on Riot. This used to be a really big mover back in the day. I think it can again if we start to see Bitcoin, particularly if Bitcoin continues to hold the way it's doing. And I think Riot blockchain could really move here. I think Riot blockchain could really move here. I pay attention to this one for sure. All right. Look at that. You're above the 50 and 100 moving average. It's holding very nicely. Yeah, I think you got some buyers coming in here. Look at on balance volume showing that there are buyers quickly coming in and accumulating shares. RSI is looking very strong. You know, you're above the 50 line, so it's looking very strong. As you can see, it was beat up for a very long time. So I like Riot blockchain significantly much more than your Boyle the pick that you called about. Appreciate the call, TC. Well, at this point, I wouldn't even short Boyle. I mean, that's if it's an ETF. You know what I'm saying? Like a lot of money is already off the table there. To continue to short here, you're basically risking, getting your ass squeezed, man. So I wouldn't even continue shorting. That's something that, you know, when it was up and using maybe a 50 moving average, you caught that breakdown and enjoyed, the ride all the way down. Let's put that chart back up and show you what I'm talking about. See what I'm saying? These are stocks you want to ride when they're up and you feel and have a strong conviction it doesn't belong to be trading where it is, and then you follow one of these higher time framed moving averages and then just walk it down like that. This is a beautiful trade, by the way, on the downside. I mean, this looks like a pump and dump. You know, this looks like something like Beyond Meat or Carvana. You see what I'm saying? Made a whole lot of money on this. I know I keep talking about it, but man, one of the most beautiful trades I've ever made in my life. You know, uh, Carvana. What's CRC? What's Carvana's trade again? I keep Carvana. Why do I keep forgetting that? CVNA. Okay. Yeah, similar chart setup. There you go. Very similar chart setup. Right? And the way you catch these is by just, looking for stocks that are just overpriced in comparison to, the current book value, current, or just common sense, Remember, Beyond Meat, at one point was worth more than General Motors. And this is a fake meat company. That was a fake meat company being worth more than GM. Absolutely ridiculous. All right. FRC. This is a stock I made a video about yesterday, and I'm actually happy with the current price action the way it is right now. I like the idea of picking stocks off the floor that are undervalued, and this is basically what that situation is. And I want to put this up there for a reason, because you may say, "Oh, well, Sal Boyle is all the way at the bottom." Well, that's different. That's very different. This is truly undervalued in terms of asset to asset in comparison to Boyle, where that's a situation where nobody really wants to be in natural gas right now, particularly now we're going into the summer. It was a very, very, very weak winter. If you go back to Boyle and you look at some of the articles, one of the reasons why natural gas did so poorly, because this winter was very, very weak across the country. You had a few cold spells. You had some surprises out in California. There was snow about a week ago or so. But for the most part, you had a relatively, weak winter. Relatively weak winter. So we're picking this off the shelf here, off the floor rather, and selling the 25 against the 2250s. I made a video about that yesterday. Check that out. Check that out. This is a really difficult time to be a trader, man, because a lot of people really don't believe in the market no more like they used to. You know what I'm saying? I see it in the comments. I see it just out on the street. That excitement that you saw in people in 2021, 2020 when they were getting those checks, it's not there anymore. And it has a lot to do with the fact that a lot of people just don't know how to play the right way. Everybody just, jump into Apple, jump into Microsoft. They just buy a call, and that works when the market is going up. But now you got to actually come out here and be a real trader. You actually have to learn how to use moving averages, how to use RSI, how to use, MACD. And so you got to actually learn how to do this shit. And a lot of people don't want to do it, man. A lot of people don't want to do that shit, man. I've learned really over the last 4 or 5 months, especially as I've watched as so many people who I thought loved the market, but don't, they don't really love it. They love the excitement of it when it was going good. Basically wither away. Like, nah, man, I'm not really trading no more. That kind of vibe. Because, there's just some people who they don't really love it like that. They really don't love it like that. Can somebody let me know if my mic is still having an issue? Life for Business had said I was having mic issues, but to me, it looks like it's looking just fine. The stream is excellent. For those of you guys who don't know, RUT is the Russell 2000 index. Also goes by IWM, is another way to play that. This ETF, just fallen from the moon because higher interest rates by the Federal Reserve, you know, hurt these businesses because these are small. I don't want to use the word mom and pop, but these are small or medium-sized businesses, typically companies between, you know, 5 billion and below. 5 billion and below. Basically, 250 million of 5 billion is basically what you find in IWM. And these companies are indeed very interest rate sensitive. Now they've fallen off very aggressively over the last few days because they've been affected by what's been going on in the banking world. If you haven't been following, we have what, in my opinion, is nothing more than a social media driven, short attack against the financial institutions in this country. I'm a Bitcoin believer. I honestly believe that long term Bitcoin wins. I get it, but what I don't see going on is you got some people out there that are saying, "Oh, the banks are collapsing. The banks are collapsing," and that's like you're creating fear that doesn't need to be there. Because at the end of the day, I'm sorry, you got a lot of 60, 70-year olds out there that are not about to switch over to Bitcoin overnight. We need these banks to still exist. I get you want to see Bitcoin go to 50, 60, 80,000. Trust me, I'm with you on that. But we still need these financial institutions to be the bridge to the other side. Because I'm telling you right now, if the federal government came out and said no more exposure or no more, Bitcoin, it's over. These folks can ban Bitcoin tomorrow if they really wanted to. If they really wanted to, you know, they really could. And this idea of creating this mania about getting your money out of banks, get your money out of banks. Like, yes, there's some people who are willing to take the risk will move to Bitcoin, but most people won't. And you're creating a lot of fear that is unnecessary. Where else are people going to go? You're 65, you just retired from, the county. Where else are you going to go? Y'all got to stop acting like, and when I say y'all, I mean people who are creating this fear out there. Stop acting like, these folks have anywhere else to go besides the financial institution down the street. We don't have anywhere else to go. I get it. When you give your money to a bank, you're really giving your money to a hedge fund that, doesn't share in the profits with you. If anything, cuts you out of what you should be earning and puts really all the risk on you. That was up until a few days ago. Now the Federal Reserve came out and said, "Hey, we don't care how much money you got in the bank. We'll cover it. We'll cover every single dollar." With that, we just nationalized the banking environment in this country. We just nationalized the banks when the Federal Reserve came out and said that. Every bank now is nationalized. And by the way, if you read the press release for the new program based on, this Federal Reserve action, it also includes foreign banks with U.S. locations. So if you are a foreign bank with a U.S. location and you are in financial trouble, the Federal Reserve will also pay you out par for par, no fees, right? And secure your deposits 100%. And secure your deposits 100%. 100%. Absolutely and incredible that our government is willing to let that happen. Any other comments, please put them in the chat room. Anything else you want to talk about, please put that into the chat room. MSFT, Microsoft doing really well. Still doing really well. I love AI, but I see AI as man, I don't know how AI. I know AI makes companies more profitable, but I don't understand how something so destructive to regular, normal, everyday people can also make a company more profitable if that means I lose my job. I love AI, but AI is going to take a lot of jobs, man. I played around with Chat GPT. That shit is scary. Very, very scary. I wish I had that back in college, but no names I will mention, but I know there are a lot of college students who are using Chat GPT to, just blast through schoolwork like nothing before. You know, I wish I had Chat GPT back in college. My grades would have been way better than they are now. I mean, if you on one of these online schools, all you need to do is have one monitor with your schoolwork, the other monitor with Chat GPT, because all these online schools are the same. They just basically give you, hey, go write this paragraph or two, go write this paper or two. All they're doing now is copying what the school wants them to do, putting it in Chat GPT. Chat GPT spitting out something, and they go to another AI program. That name escapes me right now. It basically jumbles up the words in a way that it still looks very neat and professional, but no one can tell it's AI generated. And then they take that and they submit it to the university. Straight A. Straight A. It's absolutely incredible. You know, absolutely incredible. One commodity that I've been very disappointed in is gold. I don't know if we have any gold traders here, but I've been very, very, very disappointed in gold, man. I know it's headed to 2000 here, but I fully expected this to be, on a new high, 2, 3 years ago. We had COVID. We had, you know, we basically facing government shutdown. Federal deficit is higher than it's ever been. The federal deficit is at a point now where there's no coming back. There's no way that you can come back from, because the interest payments alone are so high that there's no coming back. And by the way, we've seen that neither party is willing to do the right thing when it comes to our deficit. Now, some people will say that doesn't matter. Nobody cares about the deficit. We could just keep printing money. And that goes back to that MMT talk. I don't know if you guys remember MMT. And MMT was basically the idea that we can go into perpetual debt forever and just print money forever because there's nowhere else for the world to go. You're not going to invest in, Burundi. You're not going to go to Malawi. Okay? There's nowhere else for the world to go for safety besides the US dollar. So what does it matter if I print and print and print? That's the idea behind MMT. So with that coming back to popularity again, shouldn't gold be, we should be looking at 3,000 gold now, you know. But here's the problem with gold. Every single ounce of gold that has been commercially, you know, generated or pulled out of the ground is still in existence somewhere, whether it be a vault or in your mom's basement. It's still around. So how valuable is something that isn't necessarily scarce? You know, and that's why Bitcoin is so much more valuable than gold. And I think Bitcoin will continue to outpace gold, continue to, you know, outdo gold for the long term. Because at the end of the day, when we look at Bitcoin, understand this, and I don't mean to keep bringing Bitcoin up, but I just want you to be well aware of the fact that, when we talk about Bitcoin, understand you're talking about something that only, what is it, 21 million or 24 million out there. It's either 21 or 24. But my point is, anywhere between 15 to maybe 20% of Bitcoin is already, nobody knows where it's at. It's already gone somewhere. It's, nobody knows where it, somebody bought Bitcoin in 2011. They had it on the hard drive. They lost it. That'll never be found again. 15 to 20% of Bitcoin is gone. It'll never come back. One day it'll be a race to try to find out where these things are or what happened to these Bitcoins or find a way to replace them. But for now, you're talking about, a very limited resource compared to what we think is out there. There really isn't that much out there. It really isn't that much out there. So y'all, I see there, what, 15 people in here, 14 people in here? Give me some information. Give me some stocks to put up and let's talk about. You guys just looking at me talk. And my apologies. I tried to get the call-in line working. I've been fighting with it for the last 20, 25 minutes. They're saying my password's wrong. And then they got email customer support. What the fuck? If I knew that shit, I would have never gave them my goddamn money. I can't stand companies with email customer support. That's why I stopped fucking with Robinhood. Because one day I was suffering in the trade and I needed to get out, and I realized that they had email customer support. And I was like, God damn, I got my hard-earned money with a company that I can't even pick up the phone and talk to somebody. I gotta send an email. I'm not worth it for you to have somebody at a phone to be ready to take my call if I'm in trouble. Nah, I can't do business with you. I can't do business with you. I don't do business with anybody who cannot pick up the phone and talk to me. I'm sorry, because that, to me, I feel like you're disingenuous. You know what I'm saying? If I can't pick up the phone and talk to you, I can't do business with you. I can't buy from you. And a lot of you guys are doing business with people who won't go on the phone with you. It's like before I had my current girlfriend, and you'd be using these online dating platforms, and for me it was Facebook dating. And if the girl wouldn't get on the phone within an hour of us, speaking, I don't want to. I mean, what's the point? What's the point of continuing if you don't want to get on the phone? Because I'm not going to sit here and go back and forth with you on this messaging platform. Hey, what you doing? What do you look like? What do you want? A lot of women are on those apps for affirmation, but I digress. What are you motherfuckers traded, man? Shit. Say something. NVDA, Nvidia, Microsoft, they're just working together. You know what I'm saying? It's all AI driven. What happened to all those AI stocks? We looked at these years ago. I mean, like 2-3 years ago. There were a couple of AI stocks like Watson or something like that. Let me see, is bots still around? What happened to that ETF bots? You guys remember that? There was an ETF called bots. Bots ETF. Did that close up? No, it's still around. So why I couldn't find it? Hold on. BOTZ. Stocks with such criteria. What the fuck? Yeah, it's still around. ETF. Okay. So it's still around. All right, yeah, just trading view being a little too specific. But yeah, bots is you know, again very ETF driven. We're starting to see that, that lower high going into that. So, unfortunately with the way interest rates are, we're not going to see that explosion like we saw in many other previous runs where they just were basically out of control. You know, this is very consistent, but again, we're starting to see some lows being generated here in bots because when interest rates get high, people start to be a little bit more ooh, what's going to happen with my money, all right? And not only that, the wealthy can't do much in high interest rates environment because if there's one thing I wanted to let you guys know today is the fact that wealthy people, they don't borrow money from banks the traditional way, meaning going in there, using their credit score and getting a loan. They use what's called share-based loans, right? So an individual who has 100,000 shares of GM because their grandfather worked at GM for 37 years, or back in 1927, and he worked his way into that company all the way into the late 1950s, 60s, right? So he had the glory days of GM, incredible dividend payments, huge amount of shares, independently wealthy. You have close to 1 million families like that in America right now, where they basically live off dividends. I'm pretty sure they're a lot more than that. But these families live off the dividends, and they take loans against their positions in the stock. They're very wealthy, and how they pay these loans back is that they may sell a small portion to cover the payment on, to cover the balance, or to pay it off entirely. So when stocks go down, when interest rates go up, stocks go down, they can't borrow as much as they would like to. Also, the cost of borrowing is significantly higher for them. You got to understand that America is getting to a crossroads. We've got people who are so selfish, so greedy, that they would rather live in a country with hyperinflation than to see a recession. That's how greedy they are. That's how greedy they are. They would rather live in a 15, 16% a month inflation environment than to have a recession, which would, in the end benefit them anyway because they're already independently wealthy. So they'd still be able to buy stocks, or not buy stocks, but buy investments, hard assets, at a lower price. But they're so selfish, guys. They're so selfish. So don't listen to the news when they say, CPI number comes out and it's like, oh, 6%. That's not true. Real inflation is a lot higher than 6%. Real inflation is a lot higher than 6%. You see what I'm saying? If you spend $100 a month at groceries, did you really spend just $6 more this month than last month? No, real inflation is double, sometimes triple than what the federal government is going to tell you. What are you actually feeling when you go out and buy shit? I take my girl out to eat a lot, and I'm telling you right now, we're spending a lot more money to go out to eat now than I was during COVID and pre-COVID. Go out to eat with somebody right now. I can guarantee if you're two full-grown adults, you're not leaving the table with a bill less than about $75. And that's for a decent place. That's not even like a, you know what I'm saying? A place that actually has some class. You go into a place that actually has some class, you're spending way more money than that. You know, look how much it costs to feed yourself, your kids, your family. You got some people who are getting into situations where they're trying to renew their rent, and they're raising the rent $300, $400, and they don't even know why. You go to the office and they can't tell you why. Why is my rent going up $450? Well, it's supply and demand. What? Y'all ain't did nothing to this apartment, no upgrades, no nothing. Huh? And this is a situation too where I think the inflation is made up. I think the inflation is made up because when you're looking at several months ago, whether it be the egg situation or the shit that was going on with what else was running out that people needed about the crabs and all that. I mean, crab legs and all that crap. These companies were making hand over fist money. When inflation is real, companies don't make 100% year over year net income gains when inflation is real. Okay? When inflation is real. And in my opinion, this is just, an excuse that a lot of companies made coming out of COVID. It was like, let's just raise prices. Fuck it. Let's just raise prices. And then everybody else just jumped on the train. Like, okay, we're going to raise our prices too. We're going to raise our prices too. We're going to raise our prices too. In my opinion, that's how it was. Nobody gave a fuck about, working people. They wanted all of your COVID money, and they got it from a lot of you. Some of you guys were smart. You bought houses, which we're going to find out if that was a smart decision 10 years from now. You got some people now that are trapped because now Susie and Jane or Bob and Jane want to retire and they can't sell their home because they've got a 2.5%, 3% mortgage or a paid off house. And they're afraid to sell it because now if they sell their home, they got to go out and get a 7% mortgage, a 6% mortgage. And that's with good credit. Who wants to do that? I might as well just stay in my paid off house. So you've got liquidity that can't, you got assets that can't hit the market because these higher interest rates are actually preventing them from wanting to sell. It's a double-edged sword because you got people on the sidelines who want to buy, but then again, if interest rates get too low, now they get pushed out. It's a tough game being the head of the Federal Reserve. I feel sorry for them. And now with this fake orchestrated short attack on banks, what they want to do, and another reason why they're doing it is because they want to, pressure him into cutting rates. But cutting rates will show that he doesn't have control. So he can't cut rates. Cutting rates here will show you don't have control of what's going on in the market. That would actually send a fear signal across the world that you don't have control over what's going on. You don't have control. That's a scary place to be. But ladies and gentlemen, do not ever let anybody make you feel like, these banks not going to have your money and, folks, they're going to have your money. They need your money. Okay? These folks need your money. They need you to get paid and make that deposit. And they're going to give you what you need to get by. But they need you to keep making that deposit. These banks ain't going nowhere. Every single bank out there is basically just a hedge fund with the right to hold money. That's all it is. It's a big fucking hedge fund with the right to hold money. And all the risk is on you, and they share none of the gains with you. Some of these banks make 100, 200, 300% on their money, and they don't share any of that with you. They got you thinking, earning 1.6, 1.7% on your savings rate is somehow, reputable. That's embarrassing. I mean, the fact that they actually make commercials showing that we'll earn 2%. What? What? Real inflation is double digits, and you trying to have me get turned for 2%? For 2%? That's why your money's got to be constantly moving. Wealthy people understand that. Cash is trash in a savings account, because you're literally losing money. Your money is literally losing value sitting in there. I remember I had this bank account at my parents'. They still stay up in Michigan. I forgot like $130 in that account. And can you believe after 10 years, it went from 130 to like 44 or something like that? Because it was literally paying me like 2 cents, 3 cents, 2 cents, 3 cents, 2 cents, 3 cents over, 11, 12 years. And I'm thinking to myself, God damn, like, if I would have put that $130 into AMD when it was at $2 or something like that, like, you see what I'm saying? Now I understand why people invest. You want to keep up, with inflation. All right. If you go back to AMD, when AMD was, look at that, $3, $4 a share. Good old 2013, 2014. AMD now $89 a share, got to as high as 160 during COVID. I want to know what stocks you guys are trading. What are you guys doing right now? Please go ahead and put that into the comments. Any tickers that you're looking at, any companies that maybe you're losing money on, and you want to know, Sal, should I get out of here? And I say that because some of you guys are still calling me Sal, even though I want to be called Terry Julian. And you say, why do you choose that silly ass name? Motherfucker, you call Tim Sykes, that's not even his goddamn name. You call Tariq Nasheed, that's not even his goddamn name. You call him Mr. Beast, that's not his goddamn name. I was using my real name for 7 years. Had motherfuckers calling my job, oh, he's giving away stocks. When I was working at Wells Fargo, this motherfucking hater, this white boy was a hater. Found out that I was working at Wells Fargo. He called up to Wells Fargo telling me, ain't it against company policy for you guys to be talking about stocks on the internet? Got me written up and shit. Luckily my boss, he kept it on the low, but eventually got to a point where I had to make a decision. And I ended up leaving Wells Fargo, and I ended up going to Bank of America. And I was still doing my show. I just wasn't telling anybody, and I hid the fact that I was working over there really well from the public. Look at Lowe's. Lowe's is actually a really good company. Got to find out what's going on with Lowe's. Go to www.temu30.com. If you're not signed up with Temu, save 30% off your purchase. All new customers. That's where I get all my chargers, everything that I need, my cameras in my backyard, all of that stuff. I get it all from Temu. Use the website temu30.com. use the website Temu30.com to shop on Temu. All right. If you can be patient, use Temu for all your gadget orders. It's much better than Amazon. Amazon, you got somebody who's have you pay for the freight and all that to get it to you. At Temu, you can get it for a quarter, sometimes half the price, if you're willing to be a little bit patient with the shipping. Okay. Anybody want to put in a ticker? God damn, somebody put in a goddamn ticker. Shit. I witnessed something very interesting on CNBC today, and I want to bring it to your attention. The way, when a brother is on CNBC, we really be doing the most, fam. We really be doing the most. And I understand why this brother had to do what he did today. And it was just very interesting contrast that I want to let everybody kind of see how, the optics of just having to present yourself in a certain way so that people, can take you seriously because of, the legacy of bias in this country. And I don't do this to change the subject. I just really want you guys to peep what I'm going to show you here. And it's just sad that this has to happen. All right. So let me play it for you here.
So are the banks going to do the Fed's job from here by choking off access to credit?
We're not going to watch this whole thing. I just want you to notice something.
The banking industry is in excellent shape.
Okay. So this gentleman here is the chairman of the board. He is the chairman of the board of Wells Fargo. He's the former CEO, chairman of the board. Look at the way this man is dressed. He literally looks like a truck driver.
It has lots of capital. It has sufficient liquidity.
He looks like somebody who drives trucks for a living.
A situation where
he looks like somebody you would see who works at Walmart. Not works at Walmart, who's, shopping at Walmart. I mean, look at the shirt, buttons, undone. Let me see. Do they ever remove that thing from his thing? They don't ever remove it. Let me see there. Look at that. I mean, look at what he's wearing. Look at the way he showed up. And behind him is what looks to be maybe like hotel decor. That's more than likely hotel decor behind him. But the point is that he's comfortable. He understands who he is as the former CEO and chairman of the board of Wells Fargo. He's a millionaire, no doubt about it. Probably still raking in a couple million a year. And whether it be, in stocks gifted to him by the company or just an income for his, what more than likely is nothing more than about 30 hours every, 90 days of work for the company. Because when these board meetings meet, it's for, 3 or 4 days, every 90 days or so, and then they go. If you can get yourself a board seat on a company, it's the easiest $250,000 to $300,000 you've ever made in your life, folks. And I'm talking about just being a board member. I'm not talking about being chairman of the board. If you're chairman of the board, it's $1 million plus. But if you can get a board seat, that's 300 racks, easy money. Just to sit at the table and listen to ideas. And you say yes or no. All right. Now, again, look at him. And I'm going to show you this brother that was on literally right after him. Literally right after him. Both, again, in the comfort of his hotel room or home. And this is how the brother had to come on.
Traffic. Time offensive here. To what degree, you say?
Scott, I think the best thing to do now is barbell your portfolio, right?
This brother's in his home, and he has to come on CNBC in a suit and tie. because he understands that he can't show up looking like this. He can't show up looking like this. You know, you would think the CEO, former CEO of Wells Fargo, chairman of the board, would wear a suit. You know, so when we talk about interesting power dynamics, about you know, it's very interesting, man. It's very interesting. This
to have for us, it's
and look how this brother has to talk.
And the reason I say that is that I don't think it matters whether the Fed next week raises 25 basis points or not. I think the statement is going to be the important factor. They have to certainly recognize that damage is being done, and that because we operate in a lag effect, and no one knows exactly how much damage has been done, and rules show up in the lag effect, that they should be more prudent now. So I think
you think this brother really talks like that? Well, you know, what we're going to do here is we're actually trying to find a way to maximize alpha by, you know, investing in companies that offer great margins across the board in their different sectors of business. So, you know, we're going to continue to look at that. We're going to continue to inquire the smart minds and the smart money, and we're going to make the great decisions. He doesn't talk like that. He don't talk like that. Come on, man. But I get it, brother. I understand. I understand why you got to go on CNBC and talk like that. I know you don't talk like that. You know? Let's listen to it a little bit more.
Investors are better safe now than not. I'm not making a call to go to cash by any means, but if you look at today, and before the banking situation last week, if we had produced a price number that we had this morning without the other information, essentially the stock market would have rallied, because the thought would have been that maybe the Fed would slow down. Now the focus is more on the fact that the economic damage might be more intense and more sudden than was previously thought in most investors' portfolio. So there's a little bit of adjustment going on.
If that's the case, why do you favor industrials as one of the two groups you like, along with healthcare?
Because if you look actually over the last 5 days, of course, industrials got hit very hard. Look at Caterpillar and United.
All right, let me leave with that, because I don't want to go in too much on the brother, because again, I just understand why he's got to go up there and be like that. You know, I understand why he's got to go up there and be like that, but it's sad. It's just sad to, you know, that I noticed that today on CNBC. You know, the optics right after each other for them to show up. It was just striking. It was just very striking that this brother got to put on a suit in his house to be taken seriously, because he understands he can't wear, you know, a house shirt and you know, a wrinkled shirt and be taken seriously. All right, so since you Negroes don't want to put anything in the chat room for me to you know, to talk about, I mean, I changed so much shit on YouTube, bruh. What the hell? Welcome, ladies and gentlemen, to the Terry Julian experience. So happy you can join me here this evening, folks. This is a live broadcast, so if you got some stocks you'd love to share with the people, please do not hesitate. Hold on, guys. Sorry about that. I don't know what the fuck. Calling the call-in line. All right, I found out where that was coming from. It was another thing that was open. Oh shit, the chat room is working. Okay, what the fuck? Oh, the chat room is working. My bad. I'm looking at another room that nobody's leaving any comments. He said, why are you always on this black-white thing? America's a black-white thing. Come on, man. Like, I'm black media. I'm part of the black manosphere. Like, why would you ask me that question? I'm part of the black manosphere. I literally created this channel because I was tired of seeing, white dudes talk about stocks. I wanted to hear somebody else. You know what I'm saying? I want to hear somebody else's point of view. Why would you ask me that? That's like, what the hell? Oh, man. You asked me, why you on this black-white thing? I'm a black man in America. Come on, bruh. Talk about these companies doing mass layoffs. What's going on, Darth Kermit? Is that Kermit? Oh, Kermit. Darth Kermit. Well, understand that a lot of these layoffs are happening because these companies really over leveraged themselves with talent, during COVID. And it was for the right reasons at that time, because they were experiencing significant amount of demand for their products during a time when a lot of people were at home. When a lot of people were at home, you had huge amounts of demand for, customer service representatives, particularly like if you were in financial services or IT services. If you were, there was a lot of demand at the time. So they brought on a lot of new people to facilitate all of that demand at the time. Well, unfortunately, now that demand is shriveled up. So what you have left is, a lot of heads to pay for. And if you look at a balance sheet, what's the most, expensive part of a balance sheet? It is your people, right? Your people. Your people are the most expensive part of any business, right? It's payroll. So you've got a company like Facebook, companies like, many of these high beta names that were huge runners during COVID that are not, that hot anymore. And they've got to lay off people in order to sustain operations. Because understand that many of these companies were already losing money, right? They were already losing money. So now they're really losing money because, the terms of their financing is worse now. A lot of times, their financing that you get when you're not profitable is not fixed. So you've got floating interest rate financing, adjustable rate financing. Many of them be, 2 to 3 years, 7 years that you can't borrow against because now the cost of borrowing against that is bad. You are lacking the ability to sell shares like you wanted to, because back in the day, remember, you can just sell shares. Oh, we'll just sell, hey, we'll just, if you remember during, those low interest times, and I say that as if they were long ago, but you would just see a company do an offering. It'd be, we're just doing a, $100 million offering, and the stock would open up down $2-3, and then it'll come right back. You can't do that anymore. When was the last time you saw a company doing an offering? They can't raise money like that. They can't raise money like that right now. So you've got to cut corners. And the way you cut corners is you cut people. You cut a lot of people. And, understand this. A company like Facebook that just announced they're cutting 10,000, and they had cut a previous 10,000 maybe 2 months ago, a month ago. If you had 20,000 employees that you really didn't need, that's pretty crazy, man. That's crazy. if you had 20,000 employees you really didn't need, that's tough, man. That's really tough, you know. And it goes back to, again, just making sure that you as a person, particularly if you see yourself as a company man, you want to position yourself to be one of the most valuable people to that company you can. So that means getting as much education as you possibly can, uh, being engaged in projects, and you know, in projects at work that really make you the go-to guy, right? Somebody told me, who's an engineer um, at Dropbox, and he told me that you want to create something in the company that no one else could fix if they let you go. That's a big thing in software engineering, is to create a program or some kind of thing with the company that no one else knows how to do it but you. They can't fire you. They literally can't fire you. And a lot of software engineering teams are good at doing that. And if you see a software engineer that's gotten fired, it's probably a junior software engineer or someone who just didn't get, on a team where, they've made themselves unfireable. Insane companies can't find anything else to cut. That's insane, but I get it. Yeah, it really is. It is insane that they can't find anything else to cut, And to be honest with you, you got some companies out there that could, lay off some of the benefits that they give to some of those employees. Cut back on, the Chick-fil-A's, cut back on, some of the office space that they really don't need. A lot of these companies have insane office space, paying a lot of money to be in certain parts of town to look and have a certain status. Wendy, a lot of these employees will be glad to work from home. And if you're an essential, worker that needs to be in the office because you have a kind of work that you need to be in an office or in a laboratory or in some kind of facility, then have it for those workers. But by all means, you don't need to have customer service staff in an office. Have them work from home. I'm sure you've got to be able to save a couple $1 million because you're not living in some fancy building downtown, paying for all that heat and parking and all of that, maintenance for that building. Yeah. You said Apple did not cut not one layoff, get a skill, or take the deals. Are you sure about that? Apple didn't lay off anyone? Apple hasn't laid off anyone? Apple layoffs. Apple joins cost-cutting club. Yeah, they've laid off some people. Oh, it's limited hire. Okay, so they limited hiring rather than resort. Okay. I didn't read the whole thing. I just kind of glanced. All right, so they're basically limiting hiring. But you know what? A company that's this cash rich, though, they can't really get away with firing 10,000 people. Man, they got a lot of money. They don't really got the excuse to be laying off that many people. That's like Berkshire Hathaway saying they want to lay off 100 people. They're already a small. Berkshire Hathaway is basically a family office. If Berkshire came out and said they're laying off 100 people, he was like, "Are you serious? Y'all got all the money in the world." Berkshire Hathaway has more money than Credit Suisse, which, by the way, is falling apart. Dorothy said your company did. I almost got ref, but got a new role. Shout out to you, bro. Shout out to you. And it's scary. It's scary losing employment. And Kermit, I know you got a family. You got a family, so It's different when you're a family man, a husband, a provider, and you lose your job. It's a different kind of pressure. It's a different kind of pressure that I don't wish on anybody. You know, I don't wish on anybody. You know, but then again, that's why it's so important that somebody says get a skill or take the deals. Uh, but again, that's why again, a lot of people when it comes to education, everybody has their point of view, but you want to get as much as you can. You want to get as much education as you can because the more you get, that can insulate you, but at the same time, if you do get fired, those individuals are quickly rehired. Those individuals can quickly go into the market and get rehired. Whereas, you've got a lot of individuals out here who, for example, may not have any education, but they work their way up through a company. And what tends to happen is if you're in a company 22, 23 years, you're skilled at your job, but you may not have skills that can command what you're being paid at your current job anywhere else. So what happens is now you get laid off, and now you're asking for a certain wage that you can't get. You can't get, and then you have skills that can't transfer to other roles. So that's why you want to really be, you want to always go out there and get, yourself laser focused on a particular skill set and be, that guy for that particular role, for that particular role, I got a cousin right now going into IT, and IT is so broad. I mean, it's one of those things where it's, there's so many, and he's focused on being a Linux administrator. If you look up anything administrator, you'll find that whatever product there is in IT that is well in demand, you can be an administrator for that product. For example, they're Salesforce administrators. Salesforce is a publicly traded company, has its own software, right? And you can literally go out and get a certification, be a Salesforce administrator for a company. You can be Red Hat Linux certified. So you can be, a Red Hat Linux professional for a company. So never ever be too general. If you can, and again, I'm going on a tangent here, but I really believe that if you can specialize if you can, because that's what's going to protect you. You never want to be the jack of all trades. A little bit of this, a little bit of that, a little bit of this, and then your resume is like all over the place. That's not the guy you want to be. All right. You're saying Meta breaking out on a chart. Yeah, because Meta's getting lean. They like it because they're getting lean. Now, if they would be smart and get rid of this whole metaverse crap, if you've ever been to the Facebook metaverse, there's nobody in there. Have you guys been into the metaverse? I've been in. There's nobody there. When you go in the metaverse on Facebook, there's nobody there. You're jumping around these places and there's nobody there. It's literally nothing but a bunch of weirdos in there. All of them are just, it's literally, it reminds me of those AOL chat rooms back in the day where all they're doing is talking about, getting it in. That's literally all they're doing over there. It's literally a bunch of perverts in the metaverse right now. Google that woman who was trying to sue, and I think it was Meta she's trying to sue, that she was digitally raped in the metaverse. Look, Google that. That's literally the only thing that's happening out there right now. BA says Linux admin with RSC. Yeah. That's a great line. And you can, and BA, what BA wrote about being a Linux admin with RH, you can get in that with, less than, you know, what, 5K? With less than 5,000, you can go get that. If you got 6-9 months, you can, in $5,000, you can go get that. A lot of these Indians and Pakistanis, and especially the Indians and Pakistanis, they're coming to this country. A lot of them have, a lot of them have phony degrees, to be honest with you. A lot of those degrees are phony. But they have these basically certification mills out in India where they'll certify them in all bunch of just tech stuff. And then they come here on the visas, and they're making six figures, living in great neighborhoods, living incredible lives. And these people, don't get me wrong, some of them are talented, but a lot of them are learning on the job. A lot of them are learning on the job. They have no idea what they're doing, but they've got the resume and they're learning on the job because, Chapati or Chapat will hire his friend from India and teach him how to do the job while he's on the job. But man, if anybody out there is losing their job right now, I feel sorry for them, because I know it's, contrary to what the media is saying, it's not easy to go out there and get a job right now. There are literally people who've applied to dozens, hundreds of companies, and they're not getting anything. That's why your network has to be strong. You got to be the kind of person that knows how to, stay in touch with people, be a good networker, because networks will get you hired, man. In tough times, networks will get you hired. Or just being a badass at whatever it is you do. All right. What is it? SQSP. Yeah, Squarespace is another one. That's nice. Let's put the Keltner channels on there. It looks really nice. All right, so Squarespace was another one that's kind of getting off the floor, right? Above that 10 moving average on the monthly, I really like that. That's a 10-month moving average on the monthly chart, man. It's always a really good sign. Always a really, really good sign when you see something coming above that. Let's go back to Meta again. Let me hide these other two. Again, crossing over that 10-month moving average. I love to sell, puts when a product crosses above that 10-month moving average, not crossing over the 50 line here. Looking very good. So we'll see where that continues to go on Meta. But, these are stocks that you're going to want to love to, sell puts on. So a security clearance is a recession-proof ticket? Absolutely. Dorothy said, not for the same pay, you might have to take a 50% pay cut. Oh, yeah. During recession times, yeah. I mean, because, a lot of these companies, well, yeah, they'll pay. They understand they can get somebody for the low during recession. Those videos of, people on TikTok talking about they make six figures and all they do is, work in tech, and they don't really kind of tell you what it is they do in tech, but they just got six figures. Those days are gone, man. I used to see those little TikTok videos. I'm in tech. I make six figures. Okay, what is it that you do? It's just gaslighting. You don't see those videos no more. What's going on, Jeff? Have a new indicator called Lux Algo. No. Lux Algo? I've never heard of that. But I'm always up to learning for something new. Lux Algo, next generation stock forex indicators. Enhance your transfer. We create next visualization. We're the number one provider of trading indicators. Oh, okay. Yeah, I have to look into it. $70 a month. Yeah, I'll have to look into it. I mean, if are they making money on it? I mean, at the end of the day, man, you know, Black Box has something like that too, where there's, built-in algorithm indicators now on their Black Box 3.0 platform. By the way, if you want a free trial of that, just go to Black Box Stocks, email them and say Sal sent you. You get a 1-week free trial if you've never had one before. And they've got this new day trading algorithm thing where, it says buy, sell, buy, sell. You got some guys who say they had some success with it. Yeah, I agree the same way. It's just a lot of indicators out there. I just stick to my moving averages. I stick to my RSI. And I stick to the stuff that I know works, man. I stick to the stuff that I know works. At the end of the day, I just want to know, where is the trend? Are we up? Are we down? Where are the areas of support, resistance? Can I sell calls or can I sell some puts at a high probability that keeps me in the game long term? That's all I want to know. Because I'm those days of sitting in front of the computer all day, I can't do that anymore. I really can't do that anymore. I like to do other things. Pulling my hair out and getting stressed, and those days where I used to trade and like your heart would just be beating so hard. I would pull a trade and my heart is just beating and beating and beating because, like, good Lord, I don't want to do that anymore. I don't want to do that anymore. I don't have to do that anymore. Because I'll be honest, when I was feeling that stress, it wasn't doing me no good. I was taking huge losses. So this software has everything you need. Yeah, Jeff, I'm gonna check it out. I'm gonna check it out. I'm gonna check it out. What's going on, Michael Black? He's saying, I'm going through the chat room. Beyond, is that Bed Bath and Beyond? Yeah, they're going out of business, brother. Bed Bath and Beyond is going out of business. This is another one that I missed out on, man. Bed Bath and Beyond. I really missed out on this one, but I was just so much more convinced about Beyond Meat. But this is another one that, but I was just so convinced about Beyond Meat and that it was a scam. And again, I one of the greatest scams in the history of the market, and it's still not done yet. What else? One of the greatest scams. The purported healthy food, and it's not healthy. Yeah, we looked at Carvana earlier. Carvana is another one. Carvana is another one. Incredible move. Incredible move, man. There were so many opportunities. So many opportunities for a lot of money to be made on the downside of a lot of high beta stocks, a lot of companies that didn't make. What was that other one? Was that Vroom? Is that Vroom still trading? Vroom is another one. These incredibly high beta stocks that went public and never got back to their IPO price once they left them. Lucid. Yeah, I mean, Lucid. Is Lucid the one that's also owned by Amazon? I don't believe that's the one, right? What's the one that's like 10% owned by Amazon? Someone made $110 million on Bed Bath & Beyond. Jeff, $110 million shorting the stock? I would believe it if they made $110 million shorting the stock. I would believe it. I'm going to buy a few hundred shares of these stocks tank just to play with. Hey, you know what? Look, folks, I'm over here making fun of these stocks, but let me tell you right now, if Jerome Powell comes out next month and says no more rate cuts for the rest of the year, I'm going to tell you right now, all these stocks we just pulled up here, they're going to go up 50% from where they are right now. They're going to go up 50%. Okay? Like that's what's going to happen. Okay? You're going to see Carvana's $7 stock is going to go to 14. Okay? That's going to happen. What's that exercise company I used to shit on? I forgot that ticker. Peloton, right? PTON? Yeah. Peloton will go to 20. Peloton will go to 20. All he has to do is come out and say, I'm not going to raise interest rates anymore for the rest of the year. You know, we don't like what we saw in you know, with the banks breaking up and all of that stuff, which was basically an orchestrated attack on cryptocurrency. That's basically what that was. The two largest banks that were basically the, you know, JP Morgan Chases, the Goldman Sachs of the cryptocurrency world, they took them out. This was an orchestrated hit. That's what this was. You know, that's what this was. If I have, let me see here. If I have time, because there's a woman on TikTok I wish I could have you guys listen to. No, not on TikTok, on Twitter. I listened to her space. God. She had a great space on Bitcoin I listened to. I probably should have saved her. Gosh, because she's definitely one that you need to bookmark, because she has a lot of great spaces for cryptocurrency for those of you guys who are interested in that space. She tweets like a motherfucker, so I thought maybe I'd be easily able to pull her information up, but I'm not seeing her stuff. Hold on. Let me see. It should be my following, right? Yeah, because I'm only following like 30 people. Yeah, Caitlin Long. That's her name. This is who I want you guys to follow in here. Caitlin. Kate. They're gonna change so much shit. Oh, what that? Kate. Let me see here. Caitlin Long _ Yeah, that's her name. And she recently had where she kind of talked about, you know, what had happened recently on, and I think the space, we probably can't go back and listen to the space, can we? But it was a great space that she had on Bitcoin, and how she felt like it was an orchestrated hit on those two banks that had so much exposure to the hottest and best cryptocurrency companies that were creating some very, very interesting products, you know, that could rival some of these financial institutions. You know, basically she was just saying it was is deeper than what you think it is. And I wish there was a way for me to, there's no way to play that over again. If there was a space that this person held. Thought maybe there's a way you can play a space. Just bear with me, folks. I'm just trying to find that real quick. Gosh, she retweets a lot. But it's all good info for the most part. No user found. Hey, how you doing? Man, buying some Credit Suisse. You see, I don't have the balls for that yet, man. Even though I honestly believe the Swiss government will step in, because the Swiss government is actually being pushed to, step in for them. Because for the most part, the Swiss government, can you believe that the Swiss government is refusing to step up to save their own financial institution? The company is literally named after your country, and you don't want to step in. All the money Switzerland has, you don't want to step up. Makes no sense. Okay, let me see if I can play this real quick.
Boy.
And then figure it out from there. I hope all of you are surviving the absolute nonsense that has been.
So she starts talking here in a little bit. I want to move over to when she starts talking.
Between the White House.
Because I always go.
And then between the White House.
Affiliated with crypto in any way in the banking sector, but also, of course, a collapse that many, including yourself, predicted. So first, I just want to, maybe you can give us a summary of the nonsense of what has happened this weekend and where we now stand.
Well, boy, like I said when you and I talked on your podcast previously, there absolutely has been a coordinated effort to debank the crypto industry. Nick Carter's Operation Choke Point essay was spot on. And a lot of things happened. It started with the coordinated attack on Custodia on January 27th. And a lot of things will be revealed soon about the extent of that attack and how coordinated it was between the White House, the Federal Reserve, the Federal Reserve Bank of Kansas City, and then Senator Dick Durbin came over the top. And a number of things have happened since then. Of course, you saw coordinated attacks on the stablecoin issuers with multiple agencies going after them at the same time. And then it culminated with what happened with Signature. There are Barney Frank was of Dodd-Frank fame, was a director of Signature, and he gave multiple interviews yesterday saying that Signature Bank was not illiquid and insolvent, and that it should not have been received by the FDIC. And what's fascinating is it does look like the FDIC stepped in a little bit by surprise on Sunday. That's not the way the FDIC normally works. Normally, when a bank goes through receivership, the FDIC brings its examiners in at 5 o'clock on Friday after the bank has closed, and then it gets the bank sold and opened under a new owner on Monday morning. But it looks like from the allegations, if indeed this is indeed factually true, that the FDIC basically, that Signature ended up in its lap and on Sunday afternoon. Again, that's very out of the norm. And what's interesting is that Barney Frank himself said that it was an anti-crypto move. So to wrap it up, it does look like there's just been a series of anti-crypto moves. And some of these, in fact, many of these have not been legal. And the agencies have far outstepped their jurisdiction in doing some of these things. And there are a number of remedies for that. One is Congress. Another is the GAO, the Government Accountability Office. And of course, another is the judicial branch.
Well, we saw the judicial branch outright rejecting the SEC over the last couple weeks. Obviously, in the Voyager case.
All right, so they go into a lot of deep stuff, man. That you should definitely check out that space. It's still up here for you guys to listen to. I would definitely check that out. You see, can I at least share the link or what? Let me see here. Can I copy link to tweet? Okay, yeah, let me copy the link to it and share it with you guys. So something definitely for you to check out, man, and listen to that whole. It was a 2-hour stream, but yeah, man, go. Make sure you guys are on Twitter and you're listening to these spaces, man, because when you get on these spaces, you get to listen to the people who are actually in it. People who are actually in it, and they're giving a lot of inside information that they're not going to give on CNBC, but they'll go on these Twitter spaces among each other and give some real concrete game about what's really going on out here. So when I listened to that space, that told me everything I needed to know about the fact that, Comerica Bank didn't need to be down 17%. I took a position in that. FRC didn't need to be down, 65, 70%. They don't have any exposure to cryptocurrency. So we've got an orchestrated social media attack on two banks, right? Or a Federal Reserve, possibly a Federal Reserve attack on these two institutions that were heavily involved in cryptocurrency, right? That, and it leads me to believe that I think that is true, because this woman is deeply involved in that space, and she's created her own financial institution in that space. Among also the individuals she works around or is affiliated with, but the fact that there's so many other financial institutions taking huge hits that aren't involved at all and don't have any exposure to this and are not going to be in the way of the Federal Reserve coming in with their own Federal Reserve crypto coin, because that's basically what it is. It's central bank cryptocurrency. That's what they want to challenge. They really want to get rid of Bitcoin. I mean, they really do want to get rid of Bitcoin because, this central bank currency, they don't want this to be second class to Bitcoin. They really don't want this to be second class to Bitcoin. And it's looking like, unfortunately, if they were to release this, CBDC coin right now, it would be a second class coin to Bitcoin. You would have people who would rather take Bitcoin than this central bank digital, currency, CBDC. And that's sad, and that's not very good for the optics. And the federal government is really trying to get a hold of that, because they do want to release this soon. You said they did bail them out $54 billion last time bailouts happened. They went to the moon. Yeah, and I talked about that earlier, and how these bailouts for the first time are going to be, foreign banks are going to qualify as long as you have a U.S. branch. And if you are a foreign institution, you qualify. So I would not be surprised, Kermit, your hunch on Credit Suisse might be a good one, because the federal government, let's just say I wouldn't be surprised. I wouldn't be surprised, because we've talked about too big to fail in this country. Credit Suisse is too big to fail. And nobody wants to say that. Nobody wants to say that, but that's the truth. Nobody wants to say that, but that's the truth. A company is too big to fail. Before I leave, I want to kind of, maybe have someone give us some actionable ideas in the market. If we look at, again, my favorite way to play, we had a market that's really holding on for dear life. And as I said, I really do believe that, that 10 moving average, particularly on the monthly chart, is such a powerful and great indicator of positive and or negative momentum in any product that you're looking at that you place on this indicator. This market is holding on for dear life. I still think that our ultimate destination is 3750. All right, I really do believe we are walking a stair step down, particularly if you travel up the timelines. We're just getting every timeline to accept the fate. All right, and again, the only thing that completely ruins my argument is if the Federal Reserve comes out and says we're not doing any more rate cuts, which would be very, very bad, by the way, because if they come out and say they're not doing rate cuts anymore, it's clear that they've lost control. That means you cannot control inflation, and that's admitting defeat. And I don't believe the Federal Reserve is going to admit defeat. I believe they're going to continue to raise rates because they can't afford to admit defeat. Even though they're not winning the war on inflation, you had the market try to celebrate 6%. CPI, that's ridiculous. That's ridiculous. As I mentioned earlier in the show, 6% is not the real interest rate. We know real interest rate is a lot higher. You're not paying 6% more for stuff. You're paying, 20, 30% more for stuff than you did this time last year or 2 years ago. Right? Real inflation is a lot higher. 6% is the nice number they give you. So we need to go a lot higher. The market is going to continue to fight against that. And again, as I mentioned, you've got people who are so selfish, so greedy, they would rather see us live in a world of hyperinflation than to see a recession. That's how wicked people are. They would rather live in a world of hyperinflation than to have us go through a recession. Because why? Because they're over-leveraged themselves. You've got individuals who are over-leveraged. Let me tell you something. When you see these people on CNBC and they're screaming for their life, Chairman Powell, how can you do this to us? The Fed doesn't know what he's doing. They need to cut rates. They need to turn around. They need to pivot. You know how they trying to create all kind of acronyms? You remember during COVID, it was the V-shaped recovery, L-shaped recovery. I mean, they come up with all these kind of bullshit words to really dumb it down for all of us. Now the new word on Wall Street is the Fed pivot, to change direction and go back into a low interest rate environment where we just print money, or allow these high beta company stocks to print money and create insane amounts of debt levels for this country. Say real interest rates around 20%. I believe it. I believe it. Oh, I believe it. When I'm hearing about people, having to renew their rent for $500 a month higher than previously, when I'm seeing, people saying that now even welfare is no longer meeting their needs to feed their families, I believe it. I absolutely do believe it. Maybe more sit on it for 5 years. Right now, you're actually giving me some doubt. I wish I don't know why I'm iffy on it, but chaos creates opportunity, and I'm biased towards FRC because it's a safer bet because JP Morgan is already in there. But Credit Suisse, we know it's going to get saved. We know it's going to get saved. I just don't want to see it, halted or end up in pink sheets before it gets saved. This was a strategy that you're talking about that I wanted to do with Hertz. If you remember Hertz, but Hertz ended up in the pink sheets, and ended up being a great stock. I mean, an incredible run. What was that time? Yeah, it was an incredible run. Hertz was was an incredible run. I mean, that was pink sheet stock, came out like what, 66 cents, 22 cents, all the way to $44. It was an incredible run in less than, I think it was like a 9-month run. Would you enter any positions as of now? Absolutely. I'm still in an iron condor. Right now. Right? I'm still in an iron condor right now. Look, guys, we've got on the SPY, if you go out 38 days out, you've got the 350. Is it 355 or 350 on the SPY? It's going for a month from now. It's going for $3. $3 for 350. We're gonna see 350 SPY? Hell no. Not in a month. not in a month. So yeah. So I'm still in an iron condor. I've been selling 4,200, 4,300 for months on the SPX or the SPY, whichever product you like to use. But I'm more into selling options now. I'm very comfortable with selling options more than taking directional trades right now. You said you wish the SPY did a split. Well, isn't there a poor man's SPY? Nah, I think this is isn't it called the SXP or something like that? Oh, no. This is, no, what's that poor man's SPY? It's like an S&P 500, but it's like, I'm thinking in the right direction when it comes to these mini options, but that's not it. It's, maybe I got it confused with something else. But I swear there's an S&P 500 product that's like really small. And it's quite liquid, but maybe I'm confusing it with something else. Yeah, I think I'm thinking different. I can't remember. Hertz was a brass balls play. I mean, but Credit Suisse is a brass balls play. Credit Suisse is a brass balls play. Hertz is, I mean, you're right there. I mean, you're right there. Two different companies with very similar situations where they're both needing somebody to take over the reins and they need a buyer. And a buyer stepped in because at the end of the day, 45,000 cars, all of them at some of the best locations in America. Most of the cars, great leases on them. They're profitable from basically the minute you get them. All right. You put 25,000 miles on them and you sell them. Hertz is a great business. And Credit Suisse, the situation is there. I don't know what the debt obligations are. I understand what the car rental business is and how that works. But, Credit Suisse is, there are things going on there we don't know about. And why are they waiting so long to get some great news? Like, how low do they want to see the stock go? Because the lower Credit Suisse gets, the more attractive it gets to somebody out there, right? Somebody out there finds it very attractive, but why aren't they jumping on it? It's like the movie Wall Street, when it hits 18, buy it all. Yeah, somebody's looking at that. Somebody can buy this right now, but something is stopping them from doing that. Something is stopping them from doing that. Kermit, you say you forgot to share TQQQ. Yeah, TQQQ is no, and I used to be a big fan of the leverage products, but not in this environment. Let me get this. Not in this environment. I mean, yeah, I used to be a big fan of the leverage products, but look, when There's a time and a place for leverage products, and this ain't it. This ain't it at all. How do I believe? I really believe that the Swiss government or the EU might step in and save Credit Suisse. I think it looks bad for the U.S. government to step in, even though they have the right to do it now. Remember, they just came out with that program where they're willing to bail out par for par, at par, excuse me, no fees, any foreign institution, foreign financial institution with locations licensed in the United States for banking activity. So even if you're a foreign bank, if you have a location in America, the Federal Reserve will bail you out. These folks can't lose, yo. They tell us, the working citizens of America, that you got to pull yourself by your bootstraps. You got to, work hard and all that. But these folks can't take an L. Isn't that crazy? They can't take an L. And these bailouts are only going to become more and more and more common. They're only going to become more and more common because we don't want to do the right thing. And particularly this generation, this generation of baby boomers, they don't want to do the right thing. And the right thing to do is to take the L. That you have created an environment for yourself where you can't even retire because you destroyed the unions. You put in Reaganomics. You created a world where materialism was more important than dignity for the most part. And now look at you. You're almost 70 years old, most of them, either near their 70s or just above just over their 70, and they can't retire. They can't retire, guys. They can't retire. They can't. I mean, you see them at the office. They're still working. They can't leave. They can't leave. And then when they do leave, they try to go find another job. Because of how they voted when it was the roaring 80s. Bet the ranch, go all in, fuck the unions. And now look at you. Now look at you. You got to move to Mexico just to have a decent retirement. Ain't a damn shame you lived your whole life in the United States of America and you got to retire in Mexico to have dignity. That's a damn shame. That's a goddamn shame. He said, I think the ticker is SP. They got to move to Mexico. Yeah, okay, I think this might be it. SPLG. Because I knew there's a poor man SPY out there. I don't know let me see how liquid is this though. Oh, it's actually pretty liquid. Okay. At least the stocks are. I don't know what the options are. But it's actually got some decent liquidity. Okay. And you might want to take a look at what's in it and see if it's, probably put it as well over the SPY. There are also websites out there that can tell you how equally balanced it is. I think it's etfscreen.com. etfscreen.com. That's a great website to kind of also introduce you to some interesting ETFs, but also let you know how certain ETFs compare to others. Another one that's really good is etfdb.com, etfdatabase.com. That is another one that actually let you know, what's a similar equivalent or an inverse to a particular ETF you're looking at. For the most part, flows through the SPY. Okay. Logical Black, you say you're retiring in Africa. That's what's up. My parents are as well. Yeah, you said after that you want to be retired by 50. Good luck to you. Good luck to you. The 150 people that control the world are trying to make sure that doesn't happen for you. So you're definitely fighting an uphill battle, but it's possible. It's very possible. If you play it smart, you can retire by 50. But more than likely, you're probably someone who has to create a product or a service or own real estate or stock speculation and get aggressive with it. For the most part, it follows the SPY. Okay, yeah, you read that. Okay. Yeah. But shout out to the guys who are, you're still in here, you're still battling, you're still fighting. Look, guys, this is not a sprint. This is truly a marathon. I love the market. I eat and breathe this stuff. Every day, man. I'm in these charts literally every day. Charts that I don't even have, any skin in the game on. I'm just watching them sometimes. What would I do if I was in it? You know what I mean? Am I bullish or bearish about the SPY tomorrow? Well, I'm bearish as a whole. I think there's no reason to be bullish. I'm not a day trader, but I'm bullish for the market tomorrow because we are oversold on some of these financials that play a significant role in these ETFs. For example, if you look at IWM, the reason why IWM has taken such a huge hit over the last couple of days is because financial institutions play a very big part of this ETF. And many of those that you find in IWM are also inside KRE. All right. KRE. So KRE is one of those ones that, I'd like to pick up off the ground here. These are regional banks. These are banks that, again, are being affected by something that they had nothing to do with at all. And nothing to do with. And these, this thing is huge. This thing is, sitting on the floor here at the 40s. And, you had about $20 in this, that just disappeared. It just disappeared. Lost nearly 40% of its value in 5-6 days. Unjustified. So KRE is one thing I'd like to, to pick up off the ground if you don't like that single stock risk. But yeah, overall, I'm if I had to pick something, all right, if I had to pick something, I'll say a green day tomorrow. If I had to pick, all right, I don't like to, but if I had to pick, I say green day tomorrow. But again, this is not an environment that you should be. Just go with the trend, and the trend is lower. I mean, the trend is going lower. I mean, you could use the Keltner channel just showing you we're walking it down. We're walking it down. Okay, here's let me put up the 50. That's the 50, right? Yes, that's the 50 moving average. Yeah. So I mean, that's the 50 moving average. So we're walking it down. We're walking it down, and we walked through down before. Walking it down, walking it down, walking it down. I mentioned in a video that I recently posted that I think we could trend sideways for 5 years. We could trade sideways for the next 5 years. Would you really be surprised if we stayed between 32 and 4,400 for the next 5 years? How many people are prepared to that? How many people are prepared for their 401k not to go anywhere for the next several years? I don't think a lot of people are prepared for that. I don't think a lot of people are prepared for that. And that's why, I mentioned some people would just rather live in a world of hyperinflation because they're near retirement and they understand that, all they've got now is to bet against their retirement accounts by using share-based loans. And if the stock isn't going up, they can't do it. So they're limited. They haven't been in Bitcoin. We got nowhere else to go. So fuck every generation behind them. Let's just run it up. MMT style. You know. Do you think you could be a millionaire if I studied under Tim Sykes? Absolutely not. Absolutely not. His I got respect for Tim Sykes, but his trading strategy was played out maybe 10 years ago, because so many guys have jumped on shorting, small cap stocks, penny stocks. Now you can't even get borrows anymore. You can't get borrows anymore. There's no liquidity. There's no liquidity, and then plus if you don't have a lot of money, it's practically worthless. So shout out to Tim Sykes, because most of us are here because of Tim Sykes, including me. I got really excited. Like my first couple trades, I shorted, a stock that he was talking about, and I got so excited about him and his program. I was promoting his shit for years. And then I realized, like, what the fuck? This shit ain't working no more. And I was like, okay, now I got to really learn how to trade. And then for 2.5, 3 years, I was in the desert, man, not knowing what the fuck I was doing. I had to actually start reading some books, understanding what really is going on out here. Stop hanging around in penny stock chat rooms. Stop reading forums and doing all that goofy shit, that penny stock shit. And you have to actually start reading about what these big boy companies are doing. Am I live every day? No, I'm not. I'm live, or I plan to be live Mondays and Wednesdays. I just didn't want to have the weekend with me not being live, even though I really hate this microphone. This microphone will be gone by my next show on Monday, because it sounds terrible. I'm not here because of Tim Sykes. That guy was a fraud then, a fraud now. I read accounting books. Shout out to you, Kermit. Yeah, I'm not even gonna lie. Tim Sykes is what got me into trading initially. Penny stock trading is what got me excited at first for a long time. And then after, I lost so much money. For those guys who've been here long enough to remember, I was trying to say, man, I went over to the dark side and I became a penny stock promoter, a YouTube penny stock promoter. I got all my money back and said, fuck this shit. I got all that money back, and then I stopped promoting, and then I started learning how to trade for real. That's not, But yeah. All right. So let me just look at a couple more things. QQQ being resilient, man, being very resilient. Tech being real resilient right now. I got to give it to Tech, man, because they're being very, very resilient right now. You got a lot of stocks in Tech that are, doing much better than I expected them to be. Nvidia, Microsoft, they're doing well. You still got your floaters out there. Some stocks that I'm looking to see crash. Wayfair is one of them. I think Wayfair. Finally, Wayfair, I think will die over the next 24 to 36 months. But again, I'm still afraid of the Fed. But Wayfair is another company that I'm thinking is on its deathbed here very, very soon. I've called some really good ones out there too. Angie's List. Angie's List, that was a complete joke. I can't believe that's still even trading. Good Lord, that company's a joke. Everything on Angie's List you can do on Google for free. You can do on Google for free. What was the name of that one stock that was like, would deliver food to you? Oh my God. Like it was a meal prep company. It was a publicly traded meal prep company. I mean, that was a joke. If somebody can give me the ticker to that one. It was a public. It probably doesn't even trade anymore, but it was a publicly traded meal prep company, and this thing went public, and they dropped a turd on us. I mean, it went public, and all the insiders just dumped it. I mean, not Grub, Adam. Well, shout out to you, Adam. It was a publicly traded meal prep company. I want to say it started with a B in it. It had a B in it. Oh, God, what was the name of that company? Not Instacart. No, it was Meal Prep. They made pre-prepared meals, and it'll come to your house. And I remember one show we had a guy who talked about Blue Apron. Yes, there we go. That's the ticker right there. Blue Apron. They're not. Are they? There's no way they're still trading. Are you serious? Oh, they're still trading? Oh my God. Yes, there it is. Yep, that's it. That's it. I remember Blue Apron. Let's go to month. Yes, this is Blue Apron. They went public and all the insiders dumped. If you read the filing, the insiders had no holding period. So everybody who had helped create the company and all the rounds, all the initial financing rounds, the ones that the accredited investors are allowed to, I mean, regular people like me and you aren't allowed into it. And by the way, to be an accredited investor, it depends on the company, but for most accredited investors, you have to have at least about $5 million or more liquid cash, right? They had no holding period. So as soon as the company went public, you can dump all the shares. And that's exactly what they did. They dumped all the shares, and it never got back to where it was going to be. Blue Apron never ever came close again. There's no reverse splits on this chart. There's what you see is exactly what happened on Blue Apron. And the fact that this company is still trading today is a damn disgrace. It's a damn disgrace. But everything you see is exactly what happened. It's exactly what happened. It went public and it dumped from day one. It dumped from day one. Yeah, it's a damn shame. What happened to all those traders? And if you really want to get a laugh, go back and read the tweets from back then too. Some people who were just holding turds, just holding shit bags of losses. It's going to come back, guys. Just hold on. I think it was called the Blue Apron Committee or something. You know how they start these little groups on Twitter that try to prep and, pat everybody on the back who's taking losses. Every time a stock takes losses, huge losses, FinTwit will create like a little committee or a society of bag holders, and they'll call themselves something. And they'll just pat each other on the back until it all dissipates and goes away. If you were here for the weed run up, there was a group of guys, they called themselves the Wolf Pack, and they all had wolf avatars on Twitter. And they basically would just hound anybody who would talk bad about their place, even though they were losing a lot of money. These guys were losing, a lot of money. And eventually it fell apart. It was called the Wolf Pack. Some of you guys remember, and it was led by the guy who was called the Wolf of Weed Street. And he eventually disappeared because, that's what they all do. It was a joke. It was a complete joke. But man, there's so many zombie companies out here. We can spend all night talking about zombie companies. All of these companies that were, trading at 48, 49 PE, 60 PE, 75 PE, and now because money's more expensive, they can't trade that high no more. It's like everybody snaps back to reality. It's like, oh shit, we got to start making profit. We actually have to generate, net income. Oh my God. You know what I'm saying? Nobody says anything about net income when interest rates are 2%. So nobody gives a damn about net income. You can just, borrow to cover your losses. It's only 2% money. It's 2% money. I don't care if you're losing. AMC will eventually go broke. AMC will eventually go broke. I think in this country, you're going to have movie chains that are going to be independently owned, kind of like you have franchises at McDonald's. It's going to be a situation like that where AMC is going to have to actually franchise these properties. You're not going to see this big, massive, just, one company that owns 700, 800 theaters. They're going to have to partner with individuals who are willing to take ownership of these properties and run them as individual businesses. Because it's not working for AMC. It's not working. That's what it could have saved GameStop. If GameStop had franchised their business, I think GameStop would still be around in significant quantities. Now they're closing up shop. Franchising is going to be big again in this country because you're going to see some companies that are going to be like, shit, I want to have locations, but I don't want to have to take on all the cost. Upstart Holdings. If I remember correctly, Upstart Holdings was a SPAC. And that's, oh man, we can do a whole show on that too. SPACs. If you remember, there was a SPAC, every other day there was a SPAC going public, during COVID. And a lot of them nobody talks about. CNBC put out, they had, SPACs go on and talk about how they were going public and they were going to do this and did this. CNBC, they've helped so many people lose money. You really got to watch that show and watch that channel with a grain of salt. A lot of those people do know what they're talking about, but a lot of them don't. And they're more than willing to get you into a position that, you're going to lose your ass if you don't know what you're doing. But yeah, Michael, I really believe that AMC needs to franchise those locations out. There are independently wealthy people in communities all across America who can look at what AMC has to offer. And I think that'd be a good business for somebody, because it's clear that when you look at AMC, the last time I looked at the financials, it's too much. It's too much for them. It's too much for them. So why not just do it the Subway way, do it the McDonald's way, do it the way some of these fast food companies do it. These fast food, they don't own every single, because it's expensive. It's expensive. It's expensive to run a business where, 80% of your income is between, 6 and 10 p.m. And another 40% of that is just on 3 days of the week. All right. And then during the day, you've got to sell tickets at half price just to get people in the door. You know what I'm saying? The movie business is tough, man. If you read, AMC's financial statements, it's a tough business, man. It's a tough business to be in the movie business. The Chamath bill keeps pumping him. Yeah, Chamath. He's another one, He's another one of those guys that's just, he talks like he's very, very intelligent, but that's all I'm going to say about him. He talks like he's very smart. You got to watch out for these, I call them these brown dudes. These dudes from India, Chamath, Vivek, this guy who's running for president in the Republican Party. Gosh, who's this guy who made that DVD talking about the fraud of the presidential election? You know, watch out for these cats from India, man. You know, and I'm not saying that to be racist, but a lot of these guys, they're from India, you know, particularly from India. They will say and do anything to be a part of the in crowd. They're smart, intelligent guys. You know, they got great backgrounds. You know, some of them, they get into some very prestigious institutions. But many of them will say and do anything to be a part of the in crowd. And you know, just watch these guys, man. You know, just watch these guys, man. That's all I'm going to say about them. You know, they're attempting to create a lane for themselves, and you know, they're going about it in some very, very shady ways. You know, with the fake alt-rightness. You know, dude, you're from India. You're not alt-right. I mean, come on, you're not. There's nobody from India can look me in the face and say you're conservative and you're from India. You're from India. You're an Indian American conservative. That don't even make sense to me. Like, come on, man. It's not even like believable. But some people fall for that. You know, like this guy out of Louisiana a couple of years ago who ended up being an overrated, dismal failure. Bobby Jindal, you know, out of Louisiana. You know, he tried to be the, you know, I'm not like all these other people of color kind of person. And he ended up being an overrated disaster. You know, you say Bobby Jindal in the cowboy hat. Yeah, he was just doing so much. I mean, just embarrassing themselves. You know what I'm saying? Bobby Jindal, Nikki Haley, all these people who are just, you know, I'm not like those other people of color. I know better. You know, fuck out of here, man. You know, that's why they spend so much time just proving that they're not woke. That's what a big part of their get down is trying to prove that they're not woke. You know, let me see. Let me see if I can pull something off of Vivek. What's his name? Vivek Ramaswamy or whatever. A big part of him is just, you know, he tried to blame the Signature Bank and the gosh, I forgot the name of that first bank. Silicon Valley Bank. He tried to blame that on black people. Where's, you know, he's posting so much content, but he tried to blame it on black people. Let me see if I can go back to that video where he basically tries to blame Silicon Valley Bank on black people. Let me see. Can I go to that video? Was it March? I think it was March 14th. And by the way, he's running for president, but he's actually running for vice president. He has no chance of ever being president. His forehead is way too big. His forehead is way too big to be president. So he's running for vice president. And so right now he's basically trying to prove that he's brown skinned, but he's not brown skin minded. That's what he's trying to prove right now. Let me see. Where is that damn video? Okay, I think this might be the video right here. Let me see. This might be the video right here. Paste. Is this the video right here?
They made a Silicon Valley. There's a reason why Silicon Valley Bank was doing some of the things they were doing. They made a $5 billion commitment to green causes, to sustainable finance, in their words, to make for a healthier planet when they should have been worrying about a healthier balance sheet. This was just last year. But the dirty little secret is their trick works, because what they're doing is they're virtue signaling. They're one of the good guys in the community of Silicon Valley startups around them. They're the people who deserve to be saved, the chosen ones. And you know what? The government vindicated that political hubris in the end. That's a big part of why you see this virtue signaling, this ESGism, is that in their hour of need, whether it's Goldman Sachs in the 2008 financial crisis with Hank Paulson in the hot seat, or whether it's this time Silicon Valley Bank, it's the people who actually play the game the right way that get served in the end. But the deeper problem here is the most important issue is the Federal Reserve, which has completely lost its way, and its scope of focus needs to go back to being restoring the dollar as a unit of currency. That's
there it is.
All right, so yeah, he's playing into their base right now. You know, let me see. Can I Vivek? There we go. Let's go back to Vivek. You know, so if you don't know who this guy is, get to know this guy, because you're going to be seeing him everywhere. Get to know this guy, because you're going to be seeing him everywhere, because all he's doing is just, you know, dude, his forehead is huge. He looks like a fucking alien, dude. He looks like a goddamn alien. You know, this guy, he's born in America, but he's Indian American. You know what I'm saying? At the end of the day, dude, you're from India. Like, what are you talking about? Make America great again, bro. You're from India. You know? Like, let's stop fucking around here. You know, and I'm not saying an Indian American can never be president one day. It's just, I just hate that kind of like, and these guys from India can pander so well. They pander like, and here's the thing about is that people on the right, they're so desperate for a change maker. You know what I'm saying? To help them increase their roles. I mean, they're looking for it all in the wrong places. You got a guy like Tim Scott. You know, he's a black Republican, but you know, it's so obvious. You just go to him and say, "Hey, man, hey, what can you do to increase our base?" You know what I mean? But they will go to a guy like this, who is not going to be able to pull, you know, a room full of enough people to really move the banner for the Republican Party. You know, he's not going to get it done. You know, here's that far right talk.
Look, actually, Silicon Valley Bank itself lobbied for years saying that it was not systemically important and allowing itself to operate according to lower risk standards, lower capital requirements, saying that, hey, guys, we're not systemically important. The government's never going to have to step in and save us. Until this last weekend, when Silicon Valley completely reversed that narrative and said, actually, we are systemically important. There's going to be a bank run unless you save.
I don't see where he starts talking about, there's a video, I'll find it and probably talk about it on the next show. But he talks about more aggressively on ESG and the wokeness. Understand this, folks. When somebody talks about wokeness, they're just talking about black, okay? Anybody say woke, they're talking about black. If they say anything about ESG, they're talking about blacks. They say anything about DEI, diversity, equity, and inclusion, they're talking about black. All of those things is just anti-black. That's all it is. Okay? They don't care about anything else. It's just making sure that the status quo stays the same. That's all it is. You know, and he's going on every show he possibly can to just prove that he's white enough. Because that's what he wants to do. He wants to prove I'm white. I'm white enough. You know, I'm white enough. You know.
specific solutions we're delivering. And I think that's one of the areas where we're looking to lead this race, where I want to be really specific, saying out loud the other things that even many in the GOP have been shy to say before, from ending affirmative action to abandoning this climate cult.
Affirmative action helps you. It helped you.
That holds the U.S. back. I think the Republican Party has fallen into a false debate about tax cuts versus tax increases versus spending cuts. I think people have been really hungry for my message of a third way forward, which is actually restoring GDP growth itself. We've forgotten that that's an option, unleashing the American economy. So that's actually one of the things that I'm focused on by abandoning a lot of these constraints on growth.
All right. So
what are the...
That's all I wanted to give you about Vivek. And, I just wanted to introduce you guys to him. And a lot of these characters, Vivek, Bobby Jindal, Shamath, Chalapatia, whatever the hell his name is. God, I can't remember. What's that name from? Who made that video about the election? I can't remember his name right now. Yeah, you can't take that. I mean, again, these guys, man, and I understand it. A lot of Indian Americans, they're looking for a way to be a part of, to be recognized in this country in a certain way. And I get it. They want to be part. They want to be. I'm missing the word for it, but they just want to be recognized. So they're just, pulling every hand out the bag to find their way to be recognized in a major way. Because they're seeing the Asians, they can't get over what black folks are doing. So it's just like, we gotta do something. We gotta do something, because at the end of the day, they know how to play the cards when it matters. When they win something big, it's, hey, I'm the first Indian American. It's not, all that American thing goes out the window when they actually win something. All right, so let me get back to the charts. So yeah, guys, hey, I really hope you enjoyed the show, guys. We learned a lot here today. Good to see so many of you guys who are still trading, still hanging in there. Because look, guys, not a lot of people are still around, man. A lot of guys have lost money. A lot of guys have, buying Apple calls on Monday and selling them on Friday doesn't work anymore. It doesn't work anymore. And a lot of guys haven't, unfortunately, didn't learn that until it was too late. Didn't learn that until it was too late. Let me go on the weekly. And they got burned for most of the year. Here's the weekly in Apple. Still trying, still hanging in there. But pretty much, as you can see here, been in the range 120 to 170 here, going all the way back to January of 2022. So, even guys who going long, you haven't made any money. You haven't made any money. Kermit said, yeah, they want those butter biscuits. Oh, absolutely. Those taste is delicious. Butter deluxe. Handmade butter biscuits, by the way. But like you said, you can't take that dude seriously, man. He said, this recession turned you into an investor. You can't lose buying and holding. The Buffett way. Yeah, I mean, yeah, you look, people who pick great companies and buy them for the long term, you're going to win. The data's proved you're going to win. The data proves you're going to win. If you look at the market on a 5-year timetable, you don't lose money, believe it or not. If you look at the market, the stock market, on a 5-year table, you don't lose money. If you go even 15 years out, all right, you make quite a bit of money. If you take it at a 15-year time frame, you make quite a bit of money if you stay invested and keep trading. But, there are ways for you to, take a shorter horizon and make quite a bit of money. Selling out of the money calls, puts, I don't want to tell you who my, guy is I'm learning from, because he's at an age now where he's declining, and I'm about to jock his style a little bit. So last thing I need y'all to go is go look at his shit and be like, oh, okay, I see where he's getting all his shit from. 'Cause I'm trying to go box that shit up and sell it to y'all. So let me not give away too much. I heard somebody in the comment was asking, who do you learn from? Oh, I can't say that. Some of you guys already know, but I don't want to put his name out there because, again, he's very elderly now, so he's not promoting his business as much as he used to back in the early 90s. But his strategies, boy, I went back. I'm talking like 95 to 2015, and they work. I'm like, oh shit, this shit was working. 2015 to 2021, shit was working. All right, and I've been introducing you to that slowly but surely in my most recent videos. Eventually, I'll package it all together and offer it to you guys. But buying deep in the money options and understanding break even, but more importantly, where the stock needs to go for you to start making profit right away is very, very important. You say you might as well tell us, hell no. No. I got to package it up and sell it. I got to sell it. Any swing options are looking at right now? Oh, man. Besides, these beat up, KRE, I would take that position right now. I'd do that in a heartbeat in KRE. KRE, I'd do that, I'd take a position in KRE in a heartbeat. I'm in FRC right now. FRC, I think is a better position right now. I'm selling the 25 calls against the 2250 calls. But in KRE, I could just look at the chart and tell you right now. I don't know what the option chains are. If it's by $1 or by fives. But, just find a deep in the money call option, sell one and buy another one. Your break even has to be anywhere between 15 to 30% away from the current price action. And in a situation like this where you're already oversold, right? You're already oversold. Now you're just really looking for a bounce back to, not even, to the middle of the Keltner channel. You just need, a good move, like a good $5, $6, $7, $8 move. Getting it at today's low would have been probably the best entry. But, if you open up red tomorrow and you got some dry powder, why not? Why not? You gotta, at the end of the day, you gotta just be smart, just be smart. But a lot of people don't like the idea of risking more than they make, but that higher probability is what's going to build your account over time and get you wanting to play this over and over and over again. Sometimes getting too directional and taking losses here and there, man, that really beats you up. And that's how you end up being like, man, fuck the stock market. Well, then you ask, hey, man, how are you trading? Well, I buy calls, I buy puts. Well, do you know any advanced option trading strategies? Not really. I mean, well, yeah, that's why you're not winning. You don't really know no other shit. Dorothy said, we don't withhold money secrets here. No, it's not withholding. It's just, wanting to put a package together. I'm Terry Julian now, so Terry Julian has to be consistent, has to do it the right way. He has to create a product, because people don't respect people who don't have a product to sell, it seems like. In America, if you're going to create something, if you're going to be a personality, you got to have something to sell, because people expect that. So if you're just yapping and you're not selling anything, people don't respect that. So I got to have something I got to sell, and then people respect me. Even if you don't buy the shit, you're like, he's selling shit. So ladies and gentlemen, thank you so much for joining me. I only meant for this to be a 1-hour show. And yeah, look how long it's, how long we've gone on. It was supposed to be a 1-hour show. But when I start talking about stocks, I can't stop talking. Because I can talk about this shit all day. I love this so much. And those of you guys who watch me for hours, and you love it too. We don't need 100 people. We don't need 1,000 people in here, man. We just need the people who really care. That's it. That's all I want to be around. I just want to be around people who care about it. I can't wait for the market to open up tomorrow. I can't wait for the market. In fact, man, let me just check where the market is right now. Okay, so we're up after hours, but hey, man, after hours doesn't matter. Oh, see, I called it. There you go. Credit Suisse to borrow 45 billion, excuse me. Oh, shit. Oh, man. Can we go there? Hold on. You guys see that? Credit Suisse to borrow 45 billion from Swiss National Bank. People have been getting on the Swiss, and they said, hey, why don't you guys bail out the biggest national bank in your country? Credit Suisse, they use your country's flag on their logo. If you buy a Credit Suisse shirt, it literally has the Swiss national flag on it. Oh my God, I still want to call you Bats. Kermit, you might have missed out on this one, bro. You might have missed out on this one. Hold on. Let me see, can you? Oh man. Oh man. I don't think I can see where the stock is after hours right now, though. Let me see. Hold on. Is it C? Okay, yeah. Okay. All right. 15 cents after hours right now. 15 cents after hours right now. But, man, it's going to be up. It's going to be up tomorrow. It's going to be up tomorrow. $54 billion. Come on, man. $54 billion. Just write off all your losses, man. Y'all back in business now. 54 billion, you back in business. Too big to fail. It works every time, man. See, that's the secret. Just get as big as possible and then start fucking shit up and you'll get bailed out. You're not going to go to jail. None of these guys are going to go to jail. You know they're not going to jail. They should be investigated. Man, you ain't putting them dudes in jail. Stop it, man. All these dudes are so politically connected. Their kids go to the school with the presidents and senators, and you ain't putting these people in jail, man. Stop it. It's your boy Sal. Tomorrow is another trading day. Trade well. Shout out to everybody in the comments, man. Till next time, see you guys back here. More videos coming out tomorrow. Until live Monday. Shout out to Dave. What's up, Dave, man? Yeah, you kind of missed it. I've been on for 3 hours. I'm exhausted.